Hi, everybody. This is Gary Dean, and this is our nightly video report for Wednesday, March 22nd, 2017. I'm back from the Bahamas, and it's kind of freezing in New Jersey, but back at the computer, able to do my reports. Yesterday, we saw a big break in the market. As I mentioned in the morning notes, we actually closed below the 200-day moving average on the 60-day. On the 60-minute charts, and that's something that we have not seen since really this Trump rally started. Now, I was kind of thinking that if we broke through say, the 2340, which I mentioned into the notes, that we were going to get a quick drop down to the 2327. Now, that's the 50-day moving average right there. Looked like that was going to play out, but we found buyers that came in right around that 2335 level, and they brought it back up. So here's the channel that I was following. And I was thinking that, if it broke through it, then what happens is we're going to start coming into support. But again, these buyers stepped in, they brought it back up. We closed up four, nothing crazy being how much we were down on Tuesday. So we didn't get that really quick short covering, quick rally right after it. So there's some definitely doubt out there, and I think a lot of it has to do with this health plan tomorrow with the vote going on. If the Republicans lose it, then what happens is all the tax cuts and everything that the president was has been talking about is going to be put on hold, and people are going to have to adjust their portfolios because they're not going to know when it's coming, and that's a big basis for really the size of the rally that we've seen has been on these tax cuts that are coming. So if they can't pass through the votes for it, then we can see some panic selling. People won't really know why, but they didn't really know why we were heading up. I know, yes, the tax cuts are great, and a lot of the regulations are being pulled, but for the size of the rally and the no breaks whatsoever, that was a little, really unknown. No one really knew why that was taking place. So we can see the same reason, for a big decline where nobody really has any idea what's going on. So, unfortunately, we didn't make it down to the 2327. Like I said, it would have made a lot more sense because it would have been the 23% retracement, and as I showed you, the 50-day moving average on the daily chart. But they elected to bring it up before that, and really, we still have a ton of resistance, right? I would say it's in this zone right here where it's anywhere from the 2353 up to the any really up to the 2368. So the bulls are going to have to push through this level to really even consider themselves somewhat out of the woods, but it's going to be pretty tough to do right there. So we had some bullish divergences on the 15-minute chart when we made this low, so that made sense. But like I said, it would have been a lot better if they would have taken it down to the 2327, because it would have given some of the retail bulls a little more of an excuse to start buying. So the 50% retracement here almost got hit, and that's just really a short term one. So right now, I think if they try to push it up in any kind of gap format, this is going to be sold off until the bulls can get above here. So I would stick with the same game plan as far as shorting strength. But what we want to do is, if it starts coming down into these support levels, say the 2300, the 2700 is just really a fib support. It's not really major support. So if it comes down here, odds of it coming through it are pretty good. But once we start getting into the 2300 down to the 2280, if it comes down there, that's where you don't want to be aggressive on the short side there. Remember, this is a trade. It's just a trade that's been taking forever to unfold. So if we come down here, we want to see support hold and then probably switch hats and go to the long side for the bounce, and then just wait to reshort it from there. So in a perfect world, this is going to get rejected somewhere in this area here. We're going to take out these lows and come down to the 2300 or possibly down to the 2280. If that holds, then we can expect another push all the way back up to test these highs again. So it will be a decent little long trade that's setting up. Now, if they try to mess people up and head up, you really want to keep an eye on that 2368. I think this is where you want to be looking to short and really just put your stop at the, somewhere around that 2380, because if they start taking that out, then most likely, they're going to come up and at least close that upper gap. So we're in the oversold levels here, but we don't have any bullish divergences. So it would make sense to come lower, but we've seen a lot of these turns off of the lows come without any bullish divergences. So I wouldn't keep that as a mandatory trading rule. To get long right now, what I would do if it comes, it would make, keep an eye down at these levels here, and then we can keep an eye on possibly, taking a long trade. But like I said, it would make more sense and make more technical sense if they came down here and built these bullish divergences. So if we take a look at the 15-minute chart, like I said, we had some bullish divergences in place. It would have made, I think, a lot easier of a technical choice for retail traders if we came down and bounced off at a 23.27, which was the 50-day moving average, but they stopped before. So it's leaving the uncertainty that these lows are going to be taken out. But really what we want to do is just put some guidelines in place. So here's the resistance, and that's coming from this 23.51 up to the 23.68. This is going to be the zone that the bulls have to push through. If they fail, it may be a good shorting opportunity. The bears need to get it through this 23.36. Then we're looking at the 23.27. And honestly, that's when I think we go right down to the 2300. And that's really what this trade was all about, was a 100, 120, 30 point move to the downside. So if we get down to that 2280, that would, fulfill what I was looking for. And I'd become, less bearish and probably start looking for some type of low. So resistance zone right here. If we look at a 5-minute chart, you can see the resistance zone is, in the same levels, but we also have just a regular 38% retracement at the 2361. And then we had all this resistance up here, all the going up to the 2368 or the 2376. So right now, I think the bulls are on defense after yesterday's big move. Can that change with, if they pass the healthcare, then, possibly we see some people buying again? Absolutely. But really, it's a flip of a coin, because I'm not sure if they have the votes, and if they don't, then there's going to be a lot of selling pressure on this market, and we could see it drop a lot further. So let's see what plays out tomorrow. Hopefully it's not going to be as choppy as it was today, and the move will be directly to the downside. So with that, have a great night, and I'll talk to you guys tomorrow.